going on, guys? It's just camera really quick.
Is that good?
I think it's all right.
Okay.
Put in the comments if the camera
Or the sound isn't doing
in high quality.
Yeah, make sure you share it out too.
Yeah, I'll be sharing it right now.
Please, guys, share this out. Thank you so much for joining. This morning we're going to be talking about the 3 barriers to home ownership.
3 barriers to home ownership.
So first, again, if this is your first time watching, we're going to introduce ourselves. I'm Krista Campbell, licensed realtor in Texas and Virginia. I've been doing the home front. I did the home front starting probably about a year and a half ago, just to help people with questions that they might have regarding home ownership, just to try to get out in front of people and give more information. Put the myths to bed and kind of put truth and information out there that can be beneficial for you when you are thinking about buying or selling a home. And this is my co-host, Evan Spencer, buyer's agent.
Buyer's agent.
Tell our audience about yourself.
My name is Evan. I love long walks on the beach, first of all, and foremost. I do love reading poetry. So yeah, those are things I like to do. But licensed realtor here in the state of Texas. Chose Austin out of all the cities in Texas, just because when you're here in Austin, you don't feel like you're in Texas.
Wow.
So I'm really glad that Krista asked me to go ahead and do the show. This is our second show. She just kind of asked me out of the blue. It's like, hey Evan, I'm thinking about doing this show. I want to put some information out there in people's hands. We actually do this on a day-to-day basis, so we just want to give you guys the correct information because there's so much information out there. We just want to point you guys in the right direction and kind of give you our hands-on experiences of how we do this each and every day, and just give you the ins and outs, the shortcuts, the tips, the tricks.
And we want to make this interactive. Yeah, so please ask questions. Stop us.
Post in the comments.
Please post in the comments. Let us know if you like it. Share this out. Hit the like button, the love button. That lets us know that what we're doing is beneficial for you. Also, and Evan didn't tell you that he is going to be on HGTV. That is super exciting. So tell us, Evan.
Man, she just announced it. I was gonna wait until we started shooting, but pretty soon you guys will be able to see me on an episode of House Hunters coming to you. I will let you know the details. I got the email yesterday saying that we got casted, me and my clients. So
that is awesome.
You guys will be the first to know. As soon as it happens, I will let you guys know.
I want to know. We want to know when, so we can tune in and watch it.
Right.
That's
I'll
exciting.
let you guys know. But Krista, how did you even come up with the name Homefront? I love the name, by the way.
Well, I'll tell you, I was just, I wasn't sure. I knew I wanted to do a real estate show. And like you said, put information out there, put true and correct information out there. So, because you can Google everything that you want to find, but it doesn't mean that it's always right, and it doesn't mean that you're going to get everything you need to know about it. So
get there. Whoa.
It's okay. That's why this is a live show. This is uncut,
Exactly.
Unedited, raw, like BET Uncut. If anybody's ever seen that before.
But no, I just wanted to put information out there. I wanted to help people that are getting ready to buy a home or thinking about buying a home have the right information for you and the right place for you to start. So what I did was I came up with a couple show names and I kind of took a poll and everybody voted.
Yeah, I love the name Homefront.
So down to business, 3 barriers to home ownership. The first one I would say, and the biggest one, is the down payment question.
Right. It's a big myth out there. How much do I need to put down? And normally what I hear from people is I need to save 20%. That was true back in 2006 with the big old housing boom that we had. But as of now, most of the down payment programs that are available, and what I've seen most of my clients do personally, is they're putting around like 5% down. Is that true for you as well too, Krista?
Yeah, and I mean, honestly, there are some programs out there that that are opening up. There's 3%, 3.5%. There are programs that are low or no money down. Now, obviously, we are not loan officers, but we work with loan officers that have programs that make home ownership possible, and you don't have to have the 20% down anymore. Each state has their own programs, but in Texas, they do have a low or no money down. I think it's maybe a bond program or a down payment assistance program that can help you get in. Now, you have to qualify for those programs, obviously, but there are ones out there. Also, in Texas, they have a USDA loan, also available in Virginia. It's a zero money down. It's a very low percentage fee that you need to pay. You know, FHA has a fee on top of. It's like a mortgage insurance premium that you pay every month, but also a fee at the beginning, which can be rolled into the cost of the loan. But there are programs available. And a lot of people think that they need to have a lot of money in their pocket. And the truth is, you do need to have some saved, but 20% you don't. So that's a myth that you can, put to bed.
Put it to bed. That's what we wanted to do today. And so if you guys been saving for the 20%, well, and you guys been saving for a while, I mean, who knows? You guys might actually have it now. So please feel free to give myself or Krista a call or send us a message if you feel like you're ready or you still have questions about that.
And I'd say the second one, and this comes along with where do I start when they'll call most of the time. I don't know about you, what you've experienced, but I get calls from people that say, I want to look at a house. Then we kind of start chatting and I'm like, well, have you talked to a loan officer, or have you done any of the homework as far as your monthly payment, affordability? What can you afford each month? So the second thing is always getting pre-approved, but this goes into credit, and a lot of people are nervous about that. They think that they need to look at houses first, but the first step actually is getting pre-approved, because I don't want to take you to a house that you might not be ready for, you might not be comfortable paying for. So there's a couple different things, but I would say credit is the second myth, or the second barrier to home ownership. A lot of people think that they need to pay all their debts off and get everything cleared up, and that's just not a reality. Evan and I went to a credit class last week, right?
Yeah, last week.
Learned a lot about the things we thought were norms that are not. When you're trying to buy a home, you don't want to pay off your car. And I thought that was funny, because a lot of people think paying off your debts are what is going to get you in. But essentially what we were told was, if you pay off your car, which is a trade line, it wipes away that credit history, and then you don't have as much positive to look at for your history that you're responsible with credit. So some of those things you really need to understand when you're looking at a home, looking at purchasing a home, because there are a couple different things. A lot of people say to me, well, my Credit Karma score is good. And that's another myth. Credit Karma is not what your home ownership score is going to be. That would be your FICO score. So that's a different model, which a lot of people don't know. Your Credit Karma score could be 30 to 40 points off. Mm-hmm. Pretty grainy. Oh, really? Thanks, Christian.
Thanks
Let us know if it gets better. Maybe it's the connection.
Yep.
How's the sound?
Thanks, Glenn, for tuning in.
Yes, thanks for watching. Guys, please feel free to say something and let us know if you have any sound issues or anything. But they told us in their credit class that there are 4 models that are basically standard, which are the home industry, the internet industry, the auto industry, and there was one other one. I think it was maybe credit, like the credit cards.
Yeah, credit cards.
There are different scoring models, and they're looking at different criteria. So you definitely want to make sure that if you're looking to purchase a home, you get with a loan officer. They can give you a plan and tell you, here, pay this down, but don't pay it off, because you don't want to eliminate your credit history, your positive payment history. You need a certain amount of what they call trade lines in order to be approved.
Right, and I think some of the biggest, kind of one of the biggest things that you guys, mistakes I see people make is like, I'm going to do it on my own without, consulting a loan officer first. With going through the process, and typically what happens or in the situation is, let's say give me 3 to 6 months, follow up them 3 to 6 months later, like, oh man, I paid this off, but it didn't affect my credit like it should have been, and then we have the conversation, then put them in touch with the loan officer. So basically we could have saved 3 to 6 months by talking to them first. So what Chris is saying is true. Yeah, we're just here, like I said, to help you guys save some time and put some myths to bed here. Also, too, as far as like a credit score that I would recommend as well, too, because I get a lot of that as well, is just at least a 620. I mean, we've helped people with with scores about 580 before, but it's pretty tough. But I recommend a 620 because that'll open up some down payment assistance programs to you as well, too. So that's a goal that you guys should have.
And even if you're close and you think, oh, I have to do this and this, I'll tell you, the earlier you get with a loan officer, the better, because they can put you on a short-term plan, or they can even tell you to do 1 or 2 small things and do what's called a rapid rescore and get you into a home a lot quicker than you thought. So it's really about what you don't know. So don't think you know everything. I'm telling you, I thought, and I've been doing real estate for quite some time, I thought that I knew until I attended that credit class, and I didn't. I learned a lot of information, and you can really get into a house a lot quicker than you thought. So
Got it.
always consult with the experts.
Consult the experts.
I think that's, and then as far as what you said about credit score, like you said, 620 is the best one that's going to open up more programs for you. 580 is the absolute lowest, but you do have to fit in what you call a really small little box of affordability, and you have a lot less that you're available for.
Right.
So 620 is pretty good, and it's not hard to get into a new home with that score.
Got it. And I got 2 tips for you guys to boost your credit. One, these are very simple tips, very common sense, but just one you can do is to set up automatic payments for those bills that you guys have that are reoccurring. And then also number 2, what you guys want to do is you want to keep your ratio of how much you can own on that card to about 30%. So if you guys have a $500 credit limit, what would that be, like 200 or something? I'm horrible at math.
30%. So
but
if you have a $1,000
limit,
limit, don't spend over $300. Keep it below that,
right.
And then make your payments on time every month. Or they even say use a little bit of your credit to go buy gas, go buy groceries, and then pay it off at the end of the month. As long as you show monthly use, because another thing that they noted was if you don't use your credit that you have available, you don't show responsible use. So even though you think you're doing something good by not using it and having zero debt, it's not going to help you home ownership wise.
Right. You have to use it every month.
Mm-hmm. And the last one is going to be affordability, which there's an amount that you're able to afford, and then there's an amount that you're comfortable with. So, and a lot of things play into that. It's not just a simple formula. There is your debt. There is the taxes on the property, and here in Texas, we are one of the highest real estate taxes. We have one of the highest real estate taxes, and along with taxes, also it depends on the neighborhood that you're looking in, because different neighborhoods can have different tax rates, which affects the amount of money that you're going to pay every month. That's the first thing that I mention to my clients when we sit down in our buyer consult is taxes. Talking about that, and then also the amount that you can afford versus what you're comfortable with, because you can get approved up to $450,000, but you don't want to pay that mortgage. You're comfortable with a mortgage at $250,000, and that may be more than enough house for you. But those are things you have to learn before you go start looking at houses and getting disappointed because that house is way more than you want to pay for.
Got it. And to figure that out early as possible, guys, is like what me and Krista said. Speak to a loan officer. I promise you, they won't bite off your head. It's a pretty simple process. And if you guys are kind of worried about, will it affect my credit? Just give you guys a heads up. Hard inquiries on mortgage loans, they usually just take 3 to 4 points off, but that usually will bounce back up pretty quickly. It usually takes about a couple of weeks for it to bounce back up. But also, too, another thing about mortgages as well, they're treated a little bit differently than, your auto loans and things like that. Just because, the government, they view it as, this is the most expensive purchase that somebody's going to make. So how they treat it as opposed to, an auto loan, what they're going to do is you guys can actually, you guys have a time limit to basically run your credit as
That
many
shopping
times.
window, right?
Yeah, that shopping window. You guys can run your credit literally as many times as you want to within a 30-day period, with it only affecting your credit once. So once you do that, like I said, it's just going to take a 3 to 4 point hit when you guys do that. But when you do that, you're going to figure out if you have the best rate, good terms. You're going to figure out what your monthly payments are going to be, and are you comfortable with that. Back to what Krista said about being affordable, or your affordability, and what you feel comfortable with.
And along with that, if you don't want to have your credit run, if you know about where it is, you can look at Credit Karma. It'll give you a baseline to start with. Know that it's not going to be at that score, but it's a good place to start. And you can have the conversation with the loan officer about your situation and talk to them and, voice your concerns, get your questions answered. You don't necessarily have to make the move and apply right away, but I would at least have the conversation.
Right.
And then, another thing that plays into it is what we talked about, your actual mortgage payment, which is another thing that I do when I sit down with my client the first time, is once we go through everything, we establish their needs, I start looking at houses. We bring them up on the computer and we start running mortgage payments so that they can see what reality looks like for a house that they actually like. Because they're shocked a lot of times. A lot of times people think, I want to stay under $1,200 or $1,300, and that's not a reality for the amount that they're looking at that spending. So bringing that into reality day one and setting their expectation of what they're going to actually be purchasing, if they decide they're comfortable with that, everybody's happy, because then we can go forward and look at houses that they're actually going to purchase and not be completely shocked when they get their estimates from their loan officer.
Right.
And affordability, again, going back to that, you can think about purchasing a condo or a single family house, which is very common here. But things to consider with a condo is that they have very large monthly HOA fees, sometimes $200-$300 depending on their amenities. So that's just another consideration. You can purchase a condo that's much less in price but has a very high monthly fee, and that's going to change your mortgage payment dramatically because it is figured in when they estimate affordability.
All right. The good thing about today and what's happening in our market is that as compared to last year, the rates are pretty much the same, guys. We just have more houses to choose from. And this information is actually coming from Freddie Mac and the National Association of Realtors. So I just want you guys to be aware of that. We have more homes to choose from, and
Inventory's up.
Right.
Now that could change in the spring. So and we aren't that far, but I'll tell you, everything is picking up. So if you're thinking about buying a home this year, I would say, get out there now, start asking questions, start finding out what's going on, start looking at houses online that you like and you want to purchase, and do your research now. Don't wait until the last minute when your lease is up next month and then you're ready to buy a house, but you really aren't ready to buy a house.
Have you done that one yet?
I haven't, no. But we do that's a good topic. If you guys have any questions, if you have any topics you want us to expand on, please let us know. Send us a message. Note it in the comments. And again, thank you for watching. We really appreciate you. And share, love.
Comment, subscribe,
anything.
Share to your friends.
Yes, please. Feedback. We like feedback. We like it when you guys...
Positive or negative.
Yes, interact with us. So thanks again
Just
for
don't
watching.
Watch. Post in the comments.
And we will see you guys next Wednesday.
See you guys next Wednesday. Remember, step 1, the barrier is what, down payment?
Down payment.
Saving for the down payment.
And which you may not need as much as you think.
Right, it is not 20% anymore. The national average is around 5%. That's how much are people putting down. The second barrier is credit. This is just for you guys that are tuning in just now. We just kind of want to recap it really quick. Number 2 is credit, your credit score. One you want to aim for is about 620. And 2 things that you guys can do to improve your credit is set up automatic payments, and also as well too keep the ratio of how much you are allowed on that card down to 30%. That will help boost your guys' credit score pretty quickly, and use the card regularly a month. And then back to affordability, Krista, that's the third barrier. Just recap that real quick.
Okay. Yeah, I mean, just knowing what you're comfortable paying and what you're approved for. Those are two things, because if you're comfortable paying a mortgage payment that's actually $250,000 versus a $450,000 mortgage, and you have been approved up to that much, you need to know what that looks like in reality. Oh, and one other thing, I want to say, watch those mortgage calculators online, because a lot of times they only input principal and interest, but most of the time people are paying taxes and insurance, and taxes here in Texas, like I mentioned, can be very high. So that can add $400 or $500 a month onto your payment, and you won't have calculated that. So that's where the reality of what the real mortgage payment looks like versus something that you researched online.
Right. Key is get with the professional.
Yeah. Always talk to the experts that can help you and tell you about the market.
Got it. Well, appreciate you guys tuning in. Share, like with your friends. Krista Campbell, the beautiful Krista Campbell.
Thank you.
The Evan with the big head.
HGTV. This guy's going to be on HGTV.
House Hunters, tune in for that. I'll let you guys know about that. But anyway.
Happy Wednesday.
Signing out.
Yep.
Episode 3 coming soon. Well, on Wednesday. We just don't know what time yet, right?
10 o'clock. We're going to
10
stick
o'clock.
to 10
10
o'clock
o'clock.
unless
10 o'clock
otherwise
on Wednesday.
it doesn't work for us. But thanks again. See you guys next week.
All right. Later, guys.